So, Tim, what do you think about the Fed's dovish commentary at these highs?
Well, clearly, all eyes are going to be on the Fed. Their statement will be parsed very heavily this afternoon, and I'm sure that the presser will also get considerable attention. There's only maybe a 25% chance that they cut today. I think most people think they probably won't, but the Fed has this long history of giving markets a one meeting in advance where going warning that we're very likely going to cut next time, which would be 6 weeks from now in late July, unless things change drastically.
How much will they mention the trade war with China, or trade discussions, I should call it?
They will not mention that directly in their statement. They may get some questions about it in the Q&A as to what degree they think that has slowed CapEx spending and business investment. I think it has held it back. There's no question about it. And they may also get some questions about Mario Draghi's comments yesterday morning, where he was extremely dovish, talking about how they have plenty of room to continue to be accommodative to support the EU economy. He didn't quite say whatever it takes like he did 7 years ago, but this was almost like a whatever it takes 2.0 from Mario Draghi. And now I think that it's also important to consider that these central bank heads do not live in a vacuum. They talk to each other. I think you're going to see a little bit of synchronized central banking from Powell today, and he's going to be along the same lines of what Mario Draghi said, although our economy is a little bit stronger than theirs, but he's not going to go completely 180 degrees the opposite direction.
Is this some sort of plan that Trump is behind to get votes? Does he want things to happen this way?
Well, that's a great question. And I mean, yesterday was interesting because, of course, he tweeted about the meeting that he was going to have with Chairman Xi from China at the G20. And, of course, he tweeted it in the morning, the day that he was kicking off his reelection campaign later that evening at a massive rally in Florida. So I don't think the timing of that tweet really surprised anyone. It was very Trumpian from that standpoint. But I just think that it's very it's certainly positive. The market reacted very positively to that. It was the market had kind of like a big move off the Draghi comments, and then a second leg higher off the Trump tweet that China negotiations were getting back in gear after having been no talks for about a month. So that's definitely a positive, but I think most people would find it to be highly doubtful that they can resolve everything and come away with a deal after the meeting at this G20 next week. So, this is an issue that I think a lot of very senior executives at Silicon Valley and in the high-tech world, even though they might not be generic Trump supporters, they agree with him. They agree with him on pushing back on China as hard as he possibly can on this issue, because it's something that has to be addressed.
Speaking of senior executives, more are thinking that a recession will happen. What are your thoughts on that?
Well, it's a question of the time frame. Now, I think that a recession happening is really out of the question for 2019. We're a week and a half from the end of the second quarter. And I would frankly I think it would be very unlikely to have a recession in 2020.
Okay, Tim, back to the markets. What levels are you watching?
Well, we're very, very close to old highs, and we're, this 2,900 level on the S&P was pretty stiff resistance for the last month and a half. We got through that yesterday. The old highs 2,945. We're maybe 1% away from that. That's a big level. The Dow at 2650 is about 350, 400 points away from old highs. The Nasdaq is maybe 2 or 3% away from new highs. The two real broad indices of the market that are still a little bit troublesome is that the Russell is still 7 or 8% above the highs that it had last year, and the transportation average has been held back considerably below the highs that it made last year.
We have some rebalances happening in the Russell and on this Friday. What are the expectations?
There are a couple of really big volume days before the end of the quarter. This Friday, we're going to have a quadruple expiration of stock index and index futures, and also the quarterly rebalancing for the S&P indices. That will be a huge volume and liquidity event. And then next Friday, we will have the annual reconstitution for all of the Russell indices. The Russell 2000 is pretty much the premier small cap index. That's an annual event. It's typically the largest volume day of the year at both the New York Stock Exchange and on NASDAQ. I don't know that it will really create a big move for the averages overall, but it will certainly have some single stock volatility and some very high volume in stocks that typically don't trade very high volumes.
All right, Tim, thank you so much. Tim the Source Anderson joins us this Wednesday. Thank you, Tim.
It's great talking to you.